So I'm gonna say something that most trading educators avoid saying. You have to pay taxes. I know, that's not the most exciting way to open a lesson, but I'm saying it directly because the traders who get into trouble, real serious life disrupting trouble, are almost always the ones who ignore this part. They learned to trade, they started earning, and they told themselves they would figure it out after. Later came, and it was expensive. So this lesson isn't about scaring you. It's about giving you the framework so that taxes are a predictable, manageable part of your business, not a surprise. So, when you are a Caribbean trader with a US formed LLC, you have two sets of obligations to think about. Obligation one, your country of residence. Wherever you live, whether it's Trinidad, Jamaica, Barbados, that country has rules about income earned abroad. Some countries tax worldwide income. Some only tax income sourced locally. Some have specific rules for foreign exchange earnings. So I'm not going to tell you exactly what your currency requires because that varies. And because I'm not a tax professional, what I am going to tell you is that you need to know the answer to this question before you start withdrawing significant money. Your mentor will give you the general framework for your country in your one on one. From there, you will consult a local tax professional for the specifics. Obligation 2, your US entity. Whether you have a Delaware or a Wyoming LLC, the United States has reporting requirements for that entity, even if you're not a US citizen and do not live in US. The two most important ones for most of our students are the Form 5472 if your LLC is a disregarded entity owned by a foreign person, which is the typical structure for Caribbean students, you're required to file a Form 5472 annually with the IRS. This is an informational return. It's not a tax payment, but the penalty for not filing it is $25,000 US. So this is not a typo here. Delaware also has a franchise tax. If your LLC is formed in Delaware, you owe an annual franchise tax. For most small LLCs, this is a flat $300 per year. It's due by June 1st. These are not optional. These are not complicated, but you need to know that they exist and put them in your calendar. So let me give you the key dates. January the 1st is the start of the US tax year. This is when your record keeping for the year begins. April the 15th, this is the US federal tax filing deadline. For a foreign owned disregarded entity, the Form 5472 is filed alongside the 1120 return. June 1st is your Delaware franchise tax due date, $300. Just set a reminder for that and do not miss it. December the 31st is the end of the US tax year, so you close your books, download your statements, and prepare documentation. Your local country will have its own filing calendar. Write these dates down, put them in your calendar now. Tax surprises are almost always the result of forgetting a deadline, not of complex tax situations. So here's the most practical advice I can give you in this lesson. Start keeping your records now, today, before you have a tax problem. What you need to track? Well, your trading income. Every withdrawal from your broker is income. The date, the amount in USD, and the amount in your local currency at the time of conversion. Your broker will give you a statement, download it monthly, and save it. Business expenses. Your trading platform subscription, your VPS if you use one, your internet connection if you use it for trading, even your home office, your accounting software. These are legitimate business expenses that reduce your taxable income. So keep your receipts. Transfer records. Every time money moves from broker to Binance to Red.Pay, from your business account to your personal account, document it. Now, this is automatically done, but you want to have a monthly schedule where you could still have it on file. Date, amount, and purpose. A spreadsheet works. A simple accounting app works. What matters is that you do it consistently every single month so that at year end, you're not trying to reconstruct 6 months of transactions from memory. Now, at some point, and that point is probably sooner than you think, you need a CPA, not a general accountant, a CPA who understands two things: foreign owned US entities and trading income. So, this is in the States, of course. This is a specific skill set. Most local accountants in the Caribbean have never dealt with a Delaware LLC. Most US CPAs have never dealt with a Caribbean resident. So, you need someone who sits at that intersection. When you're looking for a CPA, ask three questions. One, have you worked with foreign-owned US LLCs before, specifically with disregarded entities? Two, do you have experience with clients who earn trading income specifically from Forex or CFDs? And three, are you familiar with the Form 5472 and the reporting requirements for foreign-owned entities. Now, if they hesitate on any of these, keep looking. Your mentor will have recommendations based on what has worked for the students in your situation. This is one of the most valuable things you will get from your one-on-one session on this topic. So, let me be direct about a few things I see people get wrong. Red flag one, cash is not invisible. Some traders think that if they withdraw in crypto or if they keep their money in a foreign account, is somehow hidden from the local tax authority. It's not. Crypto exchanges report to regulators. Foreign accounts are increasingly subject to international reporting agreements. The risk is not worth it. Red flag number two, I'll sort it out when I make more money. The time to build a clean financial habit is when the numbers are small and the stakes are low. Trying to clean up 3 years of messy records when you're earning $10,000 a month is expensive, stressful, and sometimes impossible. Red flag number three, treating your business account like a personal account. Your LLC bank account is for business. Your personal account is for your personal expenses. The moment you start mixing them up, paying personal expenses from the business account or depositing personal income into the business account, you create a mess that costs you money to untangle. Separate, always separate. Here's the principle I want you to carry forward. Tax compliance is not optional. Tax optimization is a skill, so learn the difference. Compliance means that you pay what you owe on time with proper documentation. That's the flow, and it's non-negotiable. Optimization means you work with a professional to structure your affairs so that you pay what you owe and not a dollar more. That's the ceiling, and it's worth pursuing. So before your one-on-one, I want you to do a few things. First, gather your trading records for the current year, every withdrawal, every statement. Second, document your business structure. What entity do you have? Where is it formed? And what accounts are connected to it? Third, research the basic income tax obligations in your country of residence, not in detail, just enough to know what questions to ask. And fourth, write out your specific questions. Bring them to the session, and your mentor will take it from there. This is not the most exciting part of the journey, but it's one of the most important. The traders who build lasting wealth are the ones who treat their finances like a business, and that means getting this part right. So I'll see you in the next one. Bye bye.